Hey guys, what's going on? Sherpa here. How my bulls? I hope everybody out there is doing well. Today is the ever-awaited Sherpa's list. I just put a new one up on the website, so go check that out. We're going to go over that today. I want to talk a little bit about my strategy going forward. Short memory, quarterback memory, right? We got to have that Peyton Manning 3 interceptions and then come back and win the AFC Championship memory. Yesterday I made a call. I didn't like where the market was going. I didn't like the amount of volatility that we've been seeing, mostly about, let's be real, mostly about people that are moving the markets or making fearful decisions in the markets based on the future expectation of interest rates going up, which I think will happen, absolutely. But it won't happen by the Fed's hand as they want it to, and it's mostly going to be a bit of overreaction to the upside and the downside. So to me, I decided to put a hedge on. Now yesterday, I made the video early. I was trading throughout the day, trying to find the best way to get out of my positions. And unfortunately, I traded a little bit too early. I pulled the trigger a little bit too early on my exits, but I didn't pull the trigger too early on getting on my shorts. So I did move my portfolio to roughly 20% short. If you're not with me, totally cool, but this is an important learning place for everybody out there. We're going to turn that miss on my part into a positive on your part. There are ETFs that are levered on the downside that you can use to hedge your portfolio. The way I want to talk about this is real simple. So let's catch back up. I want to go through the positions, then I'll go through the strategy at the end. And also just show you guys kind of in a group setting how we're going to manage around a position on a bad trade, because I made a bad trade on the decision to go short. Thank God I didn't go 100%, and thank God it took a minute for me to get rid of everything, because the market came back quick just after the first power hour, which is the first couple hours of trading. So we're going to go ahead and pull up everbullish.com. Made some adjustments to the site. If anybody noticed, we got rid of the stock screeners and we added the book club. So if you're interested in any of the books that I recommend, we're going to keep that thing going, because I think, again, it really supports the Ever Bullish mission. So the Sherpa's list, this is off the top of the dome. It's on a Friday. I want you to leave the office early. Go enjoy yourself. I'll be here working for you. All right, so here's the Sherpa's list, 7-9, July 9th, Friday. Nothing good happens on a Friday. Don't overestimate this. This is like when your brand new girlfriend tells you she loves you when she's drunk. You just can't believe it yet. So no false indicators here. And remember, there's a note. I am currently hedged with 20% short the Russell. That's the small company index. You ought to know what that is. If you don't remember Russell's small cap index, the idea is that they are affected more by macro events than the large mega caps, because the large mega caps can borrow for free. And remember that the large mega caps have reserves that are out the wazoo, and if they want to, they can call their buddies at Goldman or private equity or Greenlight or wherever, and they can get free money to ride on. Small caps don't have that liberty. So when the market does tank, whenever it happens, it'll be small caps first. Okay, let's get to it. I have Facebook, Tesla, Zoom. Remember that those are the ones that I kind of keep an eye on just to see the breadth of the market, particularly the tech space. I'm not trading any of those, but these are always walking around in my pocket with me. This is my exact watch list. If you're new to the channel, this is my watch list and actually, this is more of the ready list. And again, this is the second time ever that it's been 2 pages long. So I'm going to go through it and explain it. Lulu, my favorite retail stock, moving up to 400. I told you that was going to happen, and it happened. Ride and Workhorse are both on here. Ride and Workhorse are both on here, including actually Blink warrants. This is to see what the heck is going on in the EV space with some of those kind of second tier EVs that are either going to go to 50 or 0. And I don't think either are going to go to 0. It's going to be a long burn. But when I see them get around $8, get around $9, like Ride is right now, Workhorse is coming back down. I might dabble a little bit in there if I notice that the heat map doesn't have enough, area or allocation to that space. I think that it's more of kind of like a vibey thing. I think it's a lot of people that are, right now it's Galaxy, Virgin Galactic. Right now that's the SPAC, the space SPAC. That seems to be popping 30% in a week and then dropping 30% in a week. If I can catch it on the bottom, ride it to the top, especially when there's not a lot else going on in the market, I'll do it. Okay, Riot, Mara. I feel like we're beating this horse, but I don't mind beating the horse as long as it takes me where I'm trying to go. So Riot and Mara, those are Marathon and Riot blockchain, or patent group and blockchain. Straight up, I do that whenever I see a disconnect between my 2 a.m. and 4 a.m. prices. and some correlations that I have in my head about the price of Bitcoin, where it's going. You know, I'm bullish on Bitcoin. I'm even more bullish on Ethereum. Those are dip trades. Those are swing trades. Those can be long-term holds as well. If you own the Ever Bullish portfolio, you know what's in there. So go buy it and find out. 75 bucks. Okay, QS. QS is QuantumScape. We've seen this thing all over the place. We've seen it at 32. We've seen it at 22. Right now it's at 24. I think it'll pop back after the interest rate fodder and after, you know, my anticipation is that next week is going to be sketchy. And if it is sketchy, I'm well positioned, being 20% short. You take that short position, it's down, which means that your, if the market goes, the Russell goes down, my ETF will go up 3 times. So I'm getting with 20% exposure, roughly 60% exposure to the upside with the leverage that I would normally have. I take those gains, I dump them back into something like QS, for example. LabU, what do we know about LabU? We know that I love it. We know that it was up on bad tape yesterday, which is a super bullish thing. We know that biotechs are vastly underrated in comparison to where they've been in the past when the fundamentals of the markets were the exact same. Still love LabU. I don't want to hear anything about how these 3-time levered have too much time erosion. That's true, but look, if you want the returns that you're going to get, you got to risk something, and the time erosion versus the amount that you're going to get is not correlated properly, in my opinion. That's why I use LabU. That's why I use ERX. That's why I use SOXL. That's why I use XBI and a couple others. FAS is the big one right now. What happened in the last 2 days? It dropped a crap load. Now it's coming back up big time because banks don't lose money long term. Okay, you get it on LabU. I do think it's a buy at 68. I think it's a buy at 72. I think it'll hit the 80s. And every time it drops like this, if I have some gains, I'll throw it in LabU, let it cook. Now it's the engine of my portfolio. So anybody out there that might need it, it's kind of a pat on the butt for holding that one. I'm still bullish, not pandering. That's one of the big keys to the to get to the top of the mountain with the Sherpa, baby. You can tell I'm a little more energetic today now that I had time to think, right? Okay, APSG WT. I still like that one. That's Apollo Strategic Growth. The main reason for that is that I think that you never thought you'd hear this, but the Sherpa is going to go with a little bit of real estate on his watch list. I think real estate's bullshit. I just can't even, the transactional nature and costs involved in real estate investing is so terrible, but, and the REITs do water that out a little bit, and real estate companies and holding companies like this one can water it out, some of that, real estate transaction costs. But the fact is, there's something about me that doesn't love investing in real estate. But with all these new rates hitting all-time low, which you know, they may hold, I think it's going to be more of a soft landing, right? But if they do somehow pop, we'll be fine. Everybody's going to try to get in before mortgage rates go back up. And if they stay down, everybody's going to buy new mortgage rates, trying to catch the bottom. And remember that the banks borrow for almost free when the Fed buys treasuries. So there's already a very, very deep effect inside of these things that is causing pretty much free money for everybody. I'm speaking now more towards the banks and mortgages than real estate, but look, it can't be what I want it to be. It's what it is. And right now, real estate's probably going to continue to do well the rest of the year, in my opinion. So I've added that to the list. I don't know if I'm going to trade it or not. That's going to be up to you. XBI, we know what that is. GBTC, the Bitcoin Trust, it's still trading at a discount. Every time I've mentioned that, it's crushed it the next week. So it's trading at a discount. Take a hard look at that one. MRO, making money again. I'm glad to see that. I was really happy to see that oil prices came back and per barrel, and also just in general that this OPEC thing is going to be a big deal. On the off chance that it doesn't work out, I'm sorry, that it doesn't work out, meaning that the EU decides to continue delaying whether or not they're going to keep producing at the same level that they are per day. I could see oil going through the roof. For that risk, I still like the reward of if they don't and prices come back down. We've had 4.5 years of oil companies having to figure out how to make do with less than advantageous prices, and they've had to get real lean. So we got this lean machine going out there, and if it gets back into a point where the macros are correct, or let's say more standard, and there's a reversion to the mean, now we have a sector that is primed and ready to go and all juiced up. Okay, Marathon, you know that EOG is just a mega cap play. That is in the Ever Bullish One portfolio if you own that. Oh, had to sneeze. If you own EOG, you know why. If you follow my channel, you know why. If you like oil and gas, but you don't want to take the risk of the micro and mid caps that I trade and small caps that I trade, you can always buy EOG. She's got a good dividend. She's got the best assets. I love it. FAS is the banks. I could talk all day about this. You got to trust the Sherpa on this one. Also, if you look at the chart, you'll notice the down gap and then the up gap. If we have another up gap on Monday, it's even more bullish. So use that indicator on Monday, even though we don't, love in Fridays and Mondays. I'm going to take that into consideration here. Okay, next page. This one's for a lot of my guys out there that are questioning me on Arrival. I'm out on Arrival. It'll have its day in the sun. If you own it, I'd keep holding it. If you're not trying to day trade and more of a swing trade, I'm fine holding it. I don't know that you'll be able to get it at a better price than 15, but off the chance that it goes down to 14 or 13 again, it's a buy again. If it continues to go up, I don't think I'm going to put much more eggs in that basket until it hits 20. NVIDIA, easy play on Bitcoin, easy play on gaming, easy play on semiconductor, easy play on tech, easy play on easy money, which is what the Fed is throwing into the market right now. So one of my #1 trading rules is let it be easy. Palantir is very similar. Palantir is more of a, hey, is it down today? Just buy it in hopes of the reversion. CPE, that's Callon Petroleum. We've seen that thing make us so much money. I'm just going to keep letting that one be a good trade. Devon, even old bozo Jim Cramer liked Devon yesterday, which sometimes scares me, but I like what he had to say about it. It was actually the exact same thing I had to say about it. I told you I'm coming for you, Cramer. Devon's still a good one. The more you trade that one non-correlated, the more returns you seem to get. So when CPE and MRO are higher and Devon is not, Devon takes about a week to catch up in my estimation. FANG is very similar. It's just got a cooler name. ERX is the 3 times on energy, and there's no surprise on that one being in there. That's kind of my lab U for the energy space. FTCV, that one's going to go up. I like the price now. I wouldn't hate buying that one. UWMC at $8 is a bargain. I do believe it'll hit 12 at some point, but I like the warrants more. We've been through this. So just remember, if you're not into trading warrants or you're not into leverage, don't worry about it. But in my opinion, in my estimation, is that it's roughly about 1/3 is the groove. So whenever the warrants are less than 1/3 of the price of the stock, so let's say the stock is at 10, and what's 1/3 of 10 would be 3.33. If the warrants are trading at $2 and I'm still bullish on the company or I want to get in, I'd rather buy the warrants than the actual stock, because there's just that kind of seems to be a correlation in a very tradable rule of thumb there. So that's where I'm on that one. HVBT is high Bitcoin. This was one of my plays of the week. It got crushed. I don't know what to do with this one. I just don't know, but it's going to stay on my list. Avenger, whatever it is, I like it. Just keep watching it, keep it on your list, so when you see a big down day, you can look into what it is. When that RSI hits below 30, it's a buy. It's that simple. All right, we're going to get into the strategy here. I'm going to move down and then back up. So we have SoFi on here. Again, mortgages. Again, financial services. Again, borrowing money for free and loaning it out for more interest. That's going to make money. So I do like that one. XLRE, that's a real estate ETF. That's the, I believe that's the, yeah, so it's a select fund. They try to pick the best real estates in there, companies in there, and then trade it as though it's a sector fund. I like it. SPCE, I don't like it. I'm not going to buy it, but I have it in here so I can see where the dumb money is. And a note on that. Dumb money, I should start calling square money. I think square money is more important, or actually more prevalent. It's less offensive. If you're owning this, I'm not calling you dumb. I'm just saying it's where the money that is more of retail flows are going. And now with meme stocks, we just have to pay attention to what is real and what is fake. And I just think that's fake. I mean, it's astronomical if you make money trading it, trade it. But I watch that to see where the dumb money is. And when it goes down in price, that means that people are actually buying realistic companies, which I like. So we do have Ethereum, again, long-term bullish on that one, mid-term bullish, short-term bullish. And for the rest of this month, I expect it to do well. Okay. That's the list, except for what my strategy is on the shorts. And my strategy, again, on the shorts, I have 20% of the portfolio. Let's just call it, let's make it simple and call it, let's call it $100,000. If I had $100,000, 20% would be $20,000. I've taken some losses and I've got out of $80,000 worth, and then I've taken some gains or losses and I put into the shorty. SRTY. You can also use SQQQ, and that's on here because that's the NASDAQ versus the Russell. You heard my hypothesis on small companies. So when the shorty SRTY, again, 3-time levered on the downside of the Russell, I'm using that as, I don't know what's going to happen Monday. I don't know what's going to happen Tuesday. And I've put a note to sell this thing no matter what on Thursday. And I shouldn't say sell, but reevaluate. So I'm going to continue trading that other 80% like I always do, using this very list that I'm giving you for free. This is the list that I use. These are my legit trades. But the best thing that could happen is that we have a volatile Monday and shorty's up and up above water what I bought it at yesterday. I'm going to sell it, rebuy. That means that the direction of the market seems to be doing what I want it to do. If it's down, I can continue to keep reevaluating. And I think by next Thursday, no matter what, at some point between now and then, the shorty will be back above water from when I bought it. And it won't affect my bullishness on the market going forward. I hope this makes sense to you. These are hedges that I will put on in the Ever Bullish One portfolio. I get a lot of questions about how it does in down markets. That's how I do it, and probably not with leverage, but probably with downside, maybe 1 or 2 times levered. This is how you manage a portfolio. This is how you make money. Go buy one of the Ever Bullish One portfolios. Ever Bullish All Stock, Ever Bullish, also known as Ever Bullish One, the Ever Bullish dividend portfolio that's absolutely crushing the market for dividend buyers. If you're not all about this trading, but you trust me and you like what I do, consider buying the dividend. Put it in. It's 10 positions. You'll be fine. You'll make it's right now. It's at 5.5% yield in a high market, and it's getting the returns that it needs. The balanced portfolio is what you put your mom and dad in, or what you put your retirement funds in if you're risk averse. I haven't made a trade in that one either, but I will if I have to. All the portfolios use this very reasoning, this very decision making, and the Sherpa is guiding you to the top of the mountain. If you like this content, feel free to say thank you with a cup of coffee on my website. That's how we sustain ourselves. I charge you no fees, no cost, no charge. I want to give you all the free education I possibly can so that you can battle the big institutions in your trading. The thing that I do ask is that if you make some money, or if you appreciate the videos and this new perspective and approach, go to my website, buy one of the portfolios, throw me a couple of bucks for a cup of coffee, and thank you for being a follower. Please keep it up. Chase Ever Bullish, AFG, LFG, LGR, let's freaking go. Let's freaking get rich. All freaking good. And have a great weekend. Enjoy yourself. That's why we trade, so we can enjoy our time off. So best to everybody. Quarterback mentality, back on the horse, shooting rockets. Roger Clemens, 9th inning. Let's go. Let's get it. I'm rambling. Download the Ever Bullish One podcast. Thank you.